German sandal maker Birkenstock has priced its shares at $46, valuing the company at $8.6 billion. It's the fourth major initial public offering on Wall Street in the past month, which has seen the end of a period of relative drought for new listings. Birkenstock's share price is around the middle of its suggested range, and it's been a long walk from niche sandal maker to billion-dollar company. Founded in 1774, Birkenstock is over 250 years old. Its purpose was to create contouring, supportive shoes compared to the flat soles of that time. By 1925, its shoes were sold all over Europe, and by the mid-60s, you could buy them in the United States. Fast forward to 2021, and Birkenstock was purchased for $4.3 billion by a private equity firm backed by French luxury conglomerate LVMH. In the 2022 financial year, it generated $1.23 billion and made almost $200 million in net profit. Well, let's talk to Susannah Streeter, who's Senior Investment and Markets Analyst at Hargreaves, Lansdown. Good to see you, Susannah. So why have Birkenstock decided to go public now?
Well, certainly timing is everything for an IPO. And given the fashion frenzy surrounding the brand in recent years, and of course the Barbie boost that Birkenstock's received after the sandals were featured a couple of times in the Barbie movie, it clearly thought it was the right time to capitalise on this surge of interest in the brand in the film and fashion world. And as you say, revenues had been rising pretty sharply, but profits have come under a little bit of pressure because of rising costs. And at the moment, of course, there is still a lot of uncertainty surrounding the path of interest rates. That does bode well for Birkenstock because it is profitable, unlike some of the flotations that you get when certainly high growth companies are launching, not yet profitable, but with their eye on a prize ahead. Well, Birkenstock has a long history behind it. And so I think all of this was really why the group decided to launch right now.
So, as you say, they're having a bit of a fashion moment, Birkenstocks, aren't they? But an old company that has been a long journey as a brand. How have they managed to stay relevant, do you think?
Well, it's really been the tie-ups over the decades with key fashion icons. Kate Moss, for example, the former supermodel, she was one of the first really big names to start wearing Birkenstocks, and then they've had tie-ups with a number of high-profile designers. That certainly has helped, and it's helped the shoes sell like hotcakes. And now, of course, we've had the tie-up with Barbie the movie as well. And all of this has really created a bit of a fashion frenzy around the brand. Of course, once known as an orthopedic sandal with hippie connotations, it's now worn by the stylish set. The problem with that, though, is that fashionistas are fickle, and that could be potential problems. That could be one of the potential problems ahead. And the other issue as well that's highlighted in the prospectus is concerns about counterfeit goods, knockoff copies that actually could potentially dent the brand as well in the future. With success comes risks, of course. Now, all of these could be headwinds, I think, for the company going forward.
So it sounds like they have a few concerns on the horizon, potentially. But what do you make of the valuation today? Do you think they've got the pricing right?
Well, I have to see, actually, once we get the live price through and trading really gets underway, and we are expecting a small rise in the share price when it starts trading from the launch price, but not necessarily a big pop. And also remember that the launch price came in the middle of the range, and it didn't come at the top of the range. So I think there might be a little bit of caution among investors. Often when you get an IPO, there's quite a big pop at the beginning, a frenzy of interest in new companies launching onto the stock market. I think there might be a little bit more caution around. Of course, we've got quite a volatile background, given the fact that there is uncertainty of the trajectory of interest rates and concerns about interest rates staying elevated for longer. That could also have an impact on just how much money consumers have to spend on their favourite fashion items going forward.
Susannah, good to speak to you as always. Thank you for joining us. Susannah Streeter, Senior Investment and Markets Analyst at Hargreaves Lansdown.